So let's go right into the market update. What does all of this tell us? Obviously, we've already talked about interest rates affecting demand. But if we were going to talk about one thing in the real estate market right now, it's going to be price. Price is the name of the game. Whether you're talking about rents, whether you're talking about homes, we're really keeping a strong eye on these prices, which is why I'm so glad we have the assessment team, the Ada County assessors and appraisers here, the appraisers at the Ada County Assessor's Office here to help us hear your take on what's going on with these trends, because we are down 16% in Ada County year over year on the median price of homes, and that's 12% in Canyon County. Now, we're down not too far from last month in Ada. Maybe we're up a little in Canyon. Days on market have come down just a little bit in Ada County and in Canyon County, 6 days. But year over year, days on market is up 200 some percent. So we had craziness happening, and we've felt like there's been a slight correction and that we're starting to stabilize, but we're all kind of still feeling like we're reading a little bit of our crystal ball when we watch these trends, because they're still in the process of showing us what's going on. Inventory, it has increased, and buyers in some cases are really generating some options when they're writing offers. But in other cases, we have multiple offers. Price is what all of that comes down to. So if you want to sell, you cannot max out your price and expect to sell it overnight anymore. That's part of what's been going on with these days on market. So Canyon County's median is 395,000, almost 13% lower than last year at this time, but it's up just a little bit from last month, 5,000. Same story with days on market, and inventory has really risen. The duplex and fourplex inventory has been an exception. The inventory is steady right now, and I'll show you a little trend of what we've seen with duplex and fourplex inventory. But we had 9, pendings dropped down a little bit, sales followed suit, and absorption, or the how many months supply we have of that multifamily inventory is still really low. So typically when you have low inventory, it's a little bit more of a seller's market, but we're not seeing all those rules being followed at this time. So this is an example of what we've seen in the 2 to 3 units, just some select properties that I happen to have run pro formas on. No super rhyme or reason, a few duplexes, a few triplexes. But what you'll see is the ones that are in green are active or back on market. BOM stands for back on market. And we've had a lot of that where somebody will grab it really quickly, make a quick offer, but then as soon as they settle down and settle into it, they start to get cold feet. So we've seen a lot more cold feet, especially if something isn't at that compelling price point that really makes them want to grab onto it. We've seen a couple things going on with appraisals lately, where we've had either appraisals come in low, or better yet, the price was good, appraisal came in higher for the buyer. So mostly though, we're looking at cap rates in the upper 4% range based on market rents. And in some of those cases, the actual rents are pretty far behind. So yeah, around upper 4s. But you can see here that the division duplex had a nice market cap of 5.3 and a mid 4.6 cap, and it's near BSU-ish, and it didn't sell. They pulled it. They canceled it. 1818 Washington is a triplex, a converted house triplex that was on the market for $850, and it just came back on market after having a very quick offer. And they had tried to get 1.1 million for that a little while ago for a hot minute before they realized that ship had sailed. And so this chart reads backwards, in my opinion, but it's like the newest is on this side, so it's labeled, but you can see that it reads from right to left, oldest to newest, and that's our inventory of 2 to 4 units. And so in Ada County, that blue line is duplexes. And you can see we had some decent inventory, some waves, but it's been fairly low lately. And some of the stuff that we do have is just kind of sitting there. So we have low inventory, yet some of these duplexes just aren't selling. So buyers are not willing to pay unless that price is right. Coming back down to the price. Fourplexes haven't been selling. We haven't had a ton of action in those either. That was part of those graphs that we just showed you. So I haven't updated these slides because we haven't had the data to do so. But it was kind of around a 5% cap rate based on actual rents, which is going to make it sell. And we had Corey Lane just go pending pretty quickly. That's our gross rent multiplier trend. Here's what's active in Ada and Canyon County right now. We have just a handful, maybe 7 fourplexes. You see that one of them had a price decrease, and that was Surfers Point. That's still under construction, and they're wanting to close on it now while it's under construction. And supposedly that price reflects that status. That has closed management. When we get into these fourplex communities, you have to decide if it's important to you whether you get to choose your own manager. There's a couple entities who are coming in as a full service developer, builder, then they have their own manager managing the HOA, and then maybe their own manager managing the rentals. And you have to like the way they do things then. And I think that, so this Surfers Point has max property management as a mandatory. So Corey Lane sold and was priced to sell. Brogan is cash only, so it's not our favorite in terms of how they were built as plexes. And so you have to think that when you have to think your exit strategy. And Blodgett has good upgrades, and we said last month that we expected that it would sell, but for less. So one of the strategies here is if you see something really racking up days on market, you can come in and see if they're willing to get a little more realistic on their price yet, because that's really what they need to do. The market is not aggressive. The buyers are not feeling aggressive enough to risk paying what they consider to be too much right now. So they're pushing things down. Look at all of the 5+ that we have. Usually I'm up here saying we just don't have a ton of 5+ in this market. Everything that is up there was up there last month. None of it moved. Some of it has been added. So again, I think the investors have just been, they're not as inspired by the market price. They want to see an incentive to sell, and some of these prices are just kind of at market. They're not on the make me buy you side of market, and so investors are waiting a little bit.
Are these all occupied?
Yes. No, most of them are though. Thatcher is, Geckler is, most of them are, yes. Hayes is, yes. I think Overland was not. Well, since rates are really part of this craziness, a part of this fluctuations that we're seeing, and being, part of the goal of curbing inflation, the rates are being risen to try to slow down inflation. And so with that, it's not cookie cutter. You just call this one person and you get your loan from him because you know that he's always got a great rate, or she does. We've actually had to keep looking and seeing who's offering what program. We're seeing a lot of points. We're seeing a lot of 5-year or 7-year terms, various things. So as part of this presentation, it always gets me out there and looking. So an owner-occupied home right now with movement mortgage, they're at 6.562% right now. Their non-owner occupied is in the 7.6 range, and that's both for single family and for multifamily, but there's some points involved. This particular lender's offering some of those special programs like DSCR loans, which is where they're using just the rent property, not your income, to qualify you in the property for a loan. A little closer to how the commercial loans do it. I guess they've got bank statement loans and some of those various things. So I haven't done a ton with these guys, but in some cases you need to get creative, and it's nice to know what else is out there for creative stuff. Ty Porter of One Trust and Dave Rusk have given us, and MacU have given us some rates. We were doing stuff with MacU, and then they lost their local correspondent or their local broker here, and they have somebody now, Jake, I think is his name, and they're pretty compelling with their multifamily. So their duplex rate is 6.6. Usually I can count on Idaho Central being great. Yes.
Let's see what's back.
Mountain America Credit Union. The question was, what's MACU? And it's Mountain America Credit Union. Jake is Dennison, I think is here local now. And so that's a decent rate. Idaho Central usually just does such a great job with rates, and they are at, depending on whether you do 5-year fixed, 7-year fixed, either way, they're in the 7s, and MACU's in the upper 6s. So the rates are a big part of the story here. But I know you guys love hearing about the rental market update. So let's jump right into that, because we got our NARPM data back. The Q1 survey is back. There were a lot fewer respondents in the first quarter of this year. So for whatever reason, and sometimes that skews the data, but it usually gives us a decent trend. And so we're seeing here what your vacancy looks like in Q1 2023, and it's all averaging out to about 3.5%. And did I hear any questions? Let's look at it over time, and they have it broken down in different, single family, multiple family, that sort of thing. It looks like Canyon County multifamily has the highest at above 5, and single family in Ada has the lowest vacancy. But here's what our trends are showing. So it's really spiked off, where the blue line is the combined average, but the red is multifamily and the green is single family. We've seen our multifamily vacancy go up a little bit here. And that 5 point is still a number that this chart shows since 2019, and it is still the highest we've had in several years. So we haven't had anything crazy, but there's a little bit of pressure on rents and how you're going to handle any of your turnovers. And it all comes down to our theme of the day, which is price. Yes, the value. So our single family rentals and multifamily rentals, you'll see that let's see, the blue is Ada and the red is Canyon. And we're showing if you're looking at single family, your 3 bedrooms in Ada are around 2,000. I think they were 18 something, again, 19 to 22 for your 3 bedroom single family homes in Ada and Canyon. Whereas when you get into multifamily, your 3 bedrooms were 16, 17, a little bit less. So if you've got a 3 bedroom, you're looking at somewhere around 2,000. It depends on neighborhood. If you're near BSU or North Boise, you get more rents. If you've got higher amenities, you get more. But in general, 2 bedrooms. Now here they're saying with single families, the 2 bedrooms are in the 19-ish in Ada and 17 in Canyon. But we are seeing that, again, the multifamily rentals, they're saying it's a little bit less for the 2 bedrooms, around 15 and 14. But downtown, North Boise, we're seeing 1,800 for some of your 2 bedrooms is pretty feasible, depending on what they're looking at. So there's some flex in here. What's the word around the water cooler from First Rate Property Management? They manage a lot of units. What are they seeing? How are they advising their clients to proceed on vacancies? They are seeing more inventory. With the warm weather, as the temperatures rise, we're seeing this is a good time for usually having your turnovers. But that inventory is on the rise. And so rent price is the name of the game. We're being careful. They're being careful with their increases. And if you want to avoid vacancy, which is your biggest expense as a rental, maybe paying attention to keeping those tenants in. Hopefully you're already pretty close to market rents. Hopefully you've kept up to market rents and you're not going to choose this year to do your big catching up. Because this year, those bigger increases are just not going to be tolerated as much by tenants because they have choices. In fact, Kat says there's now over 1,200 units for rent listed in the Valley. These are all the active rentals that tenants have to choose from. So we've had a few folks reach out and kind of do some pushback on their rent increases when they've gotten them, because they know they have other choices out there. We were out of homes for a while, and when we were out of homes, we were out of rentals, and we're back to having a few choices. So they're recommending conservative renewals. For owners with upcoming renewals, $25, $50, not pushing it too far, and just kind of trying to mitigate the risk of turnover. Now, last month, she warned us this was going to happen. This is what she told us last month. She said inventory is increasing. We expect the market to continue to heat up. She did not expect that the rents were going to go as crazy in the increases as they did last year. We've done our big increases, and now things are kind of finding their way, settling in. So whether we're talking about the real estate market, purchase and sales, duplexes, fourplexes, commercial properties, or even rents, all of it boils down to price right now. Price is the name of the game. If you're priced well, you're going to succeed. It's not the time to try to eke every last dollar out of something. Statistically speaking, you've got equity in your properties. If you're planning on selling, you've got some equity. So you need to kind of celebrate that. And if you want it to sell it for a reasonable side of the market that doesn't feel like you're pushing your buyer, because they just are not tolerating being pushed right now. Condition always matters, but if everybody's shopping a little bit harder and a little bit more, paying attention to those curb appeal in rentals and in purchase and sales is always a good idea, but especially now, and deferring maintenance never pays. It's actually usually more costly. We are fixing siding instead of just paint right now on one property because it went too long. We were trying to get it painted and it kept getting put off, and then you just have more costs. So let's avoid that, shall we?